Hi guys, Craig the Options Linebacker here. This is the weekend report for Sunday, September 12th. I'm going to make this a short video this weekend because everybody wants to know one thing, where the market's going. We're going to focus on that today. We're going to start with a monthly chart here on the S&P 500. Again, we're in a secular bear market. We're gone from a higher high to a lower low to a definitive lower high at this point. And what we're wondering is whether or not this pullback is going to create also another lower high within this pullback on the weekly chart and then continue the secular bear market, or is this just a pullback in the cyclical bull which is going to lead to higher prices? That's really what everybody wants to know right now between now and the end of this year. Now as we go into the weekly chart, we have a couple of different possibilities. First of all, what we should all notice here, and this just happened over the last couple of weeks, is we've put in on the weekly chart a nice defined higher low. Now, will that turn into an uptrend? Will this turn into, some blistering uptrend up here that's going to lead us up to S&P 1250 and higher? Well, possibly, but it all depends on whether or not it's able to break this prior swing high at S&P 1130. That's got to happen for this to have any hope of generating higher prices. Now, by the same token, charts are still under the influence of that secular bear, so this may be an opportunity for the bears to strike here. We did double top at S&P 1130. If this price is not able to get over 1130, if that low is taken out there at 1040, we may lead to lower prices here. If not S&P 1000 again, we'll go back to S&P 942 or even S&P 870. So which one of these two scenarios is going to play out? Well, if you know somebody with a crystal ball, perhaps they have an answer, but what I would contend is it's not that important that you forecast the future correctly. That's close to impossible to predict with any kind of accuracy. It doesn't matter how many technical analysis skills you have, the market will do whatever is necessary to make sure that the greatest number of traders will lose positions. I believe it's much more important that you program yourself on what to do based on what the market actually does. Let's see how we can apply that. First of all, let's look at the short-term bullish option. Here's the daily chart of the S&P 500. The short-term bullish option is predicated on the S&P breaking out above 1130. Now, it can get there one of two ways. We can either see the type of rally that we had at the beginning of this year where there were just no pullbacks at all. And we've seen that in the price action just the last couple of days. We haven't seen any particular pullbacks, even though we're short-term overbought. It just continues to leak higher every single day as shorts continue to cover. There were too many people that were way too short down in this area here, and they are still covering, as well as the bulls, which are being opportunistic here as we get close to the fourth quarter, perhaps setting up with a very strong bid underneath the market. In that case, we just don't get any pullbacks. So that's option one on the way to 1130 and higher. Option number two is that we make some type of fib pullback here down to a 38, 50%, or maybe as deep as a 62%, but I kind of doubt that. That would be representative of a pullback that we saw similar to this in mid-July. Regardless of how it gets there, whether or not it just melts up past 1130 or we do a standard pullback first and then we see an explosive move higher, it's got to get above 1130. In my mind, the possibility of this higher low setting up, the pullback and then the higher low, would probably be the more explosive of the two. If we did have a pullback, we'd see a very strong move up here, just like what we saw here or any other pullback type of arrangement, even the ones that we saw here in late February. If we see a melt up, we'll see very low volatility. We'll see very small candles. Again, very similar to what we saw here. But again, I emphasize the bottom line has got to be the price getting over 1130 for us to have any hope of gains going forward into the fourth quarter. Now let's go over the short-term bearish option for lower prices from here. I believe this setup's a little simpler. I think what we'll see is a big red candle come in at some point if this is going to play out. Now, it could start as this pullback, and this is what's going to be really tricky here because nobody's going to know whether or not this is going to set up the higher low and lead to higher prices, or whether this is going to lead to lower prices. It's just going to depend on what happens with supply and demand and the sentiment. But what will happen is that 61.8% fib of this move will be broken. That'll be the first clue, and then we'll see weakness underneath that level, and that will be almost a sure bet that we'll probably see lower prices than 1040. That will probably be our clue that 1040 is probably going to break, because we've had 1, 2, 3, 4, and actually several tests during here of that level. If 1040 breaks, then we're going to see a very, very quick move down to at least S&P 1010. Guys, in the short term, what you've got to reconcile is that either of these two scenarios could play out, either the bearish option here or the bullish option. It's important that you not get too married to one particular bias, whether it's bullish or bearish, and that you take the appropriate steps based on your pre-programming, whatever type of position that you're going to be playing, whether it's a directional position or whether it's a non-directional spread trade. You'll know what to do based on what the price action is telling you. So that's it for this weekend, folks. It's football season, so it's time for me to get back to the locker room. We'll see you next weekend.